Hey, this is Tom, and it seems like this might be the end of the whole Chinese renaissance on the New York Stock Exchange and the NASDAQ. It seems that the Chinese regulators are not really taking a tough stand against Chinese companies using the whole offshore structure. I'm going to talk about it in a second, but this is a huge deal with some really cataclysmic effects on you if you own any Chinese stock, so you better stick around for this. Also, AMD is going through the roof, currently almost at $92. I'm going to tell you if I think it's a good price to get in or get out. Again, just my opinion, but I have a whole due diligence about AMD, which I'll share with you. Also, Microsoft just repaid a note in euros, and I'll tell you why I think it's a huge sign about inflation in a second. Also, Cathie Wood is selling ROKU. The second biggest holding in the RK fund is gone. Not exactly, again, the FUD is taking over. And even though I don't hold any ROKU shares, I just want to make sure that you understand that this is really a no news being blown out of proportion. But more importantly, I think we have some strong signs coming up that the whole COVID trend might be back. So COVID-friendly companies such as Peloton, DoorDash, Airbnb might be on the rise again because it seems that the terms are ripening. And in this video, I'll show you why I think that the COVID trend might be back again for a second go around. So in case you missed it the first time, or in case you did it and you want to do it again, this might be your chance to get in early on some COVID-friendly stocks because we have some strong evidence that this might be back. And for convenience purposes, because I know not everybody cares about every single item I'm going to talk about here, there's timestamps below so you can skip ahead to the parts you actually want to hear about more. Before we get started, as usual, I ask you just of one thing. Don't click nothing, don't smash nothing, don't buy nothing, don't subscribe to nothing. Just give me your full attention. That's the only thing I need. And let's just jump straight into it. So first of all, let's talk about China. So just a few days ago, we had the Didi scandal. Didi went public, raised a lot of money. A few days later, the Chinese regulators basically saying, well, we can't have you do any more business before we actually vet you. And then the whole stock collapsed, causing people a massive amount of damage. Now, I spoke about this. I specifically made a video covering this stock. And I told you, this isn't really the big deal here. It's a massive issue. But the bigger issue is, I think that the whole Chinese structure, the way Chinese companies go public in the US, is the bigger problem. And I told you, this is just the beginning. Now, I had no idea that just 2 days later, we're going to get this article basically saying China targets offshore IPO structure. And I'm not going to pretend like I knew that this is going to happen within days after my video. I'm not a prophet. I knew about the risks and I knew that they might materialize. And this is happening way faster than I even considered. But now we absolutely have to talk about this. So essentially, as I mentioned in my Didi video, the way Chinese companies go public in the US is by this weird convoluted structure in which you don't own any shares in the actual Chinese company going public. Sounds strange. Well, it is like it is. Essentially, Chinese companies can't be owned by foreign shareholders according to Chinese laws, at least certain Chinese companies. And that's why they made up this weird structure just 20 years ago. Essentially, they're swinging the Chinese company. It's being owned by a Hong Kong company, which is being owned itself by a Cayman Island or a Virgin Island or a BVI or a Guernsey, whatever, some offshore holding company, holding a Hong Kong company, holding the actual company with the business and the assets. And you, my friend, as an investor in the Chinese company, you own shares in that BVI or Cayman Island company. In the case of Didi, it was the Cayman Island, but it doesn't matter for that purpose. And I said it in my video, number one, you have no enforceability. As a guy who doesn't own, or a girl for that matter, any shares in the Chinese company that has the business, you have very little recourse, very little enforceability as far as the actual company with the assets and the business. So that's a huge deal in itself. But I said this in my video, and I actually warned about this. The Chinese regulators can pull the plug on this any minute, basically say, well, we never actually considered the structure because essentially these Chinese companies were doing this for 20 years, kind of with the Chinese government basically just, turning a blind eye. At some point, the Chinese government can wake up, like it's doing right now, and basically say, well, this is not cool. We're not having that. And this is exactly what's going on right now. And now, according to this article, which I am going to link below, I'm not going to read the full article for you. According to this article, the Chinese regulators are now saying you can't go public in the US using this offshore structure without us first approving this, pre-approved only. Now, this is just about future IPOs, and I get that. But this article says nothing whatsoever about existing companies that have used this structure in the past to actually become public in the US. Now, here's a question for you. If the Chinese regulators decide that this structure is not valid, which it seems. In fact, they're actually saying this. Let me show you. In the article, there's a paragraph basically where they actually say exactly that. China's securities regulator is setting up a team to review plans by Chinese companies for initial public offerings abroad. Now, look at this, including those using a corporate structure which Beijing says has led to abuse. So they're already giving away the cards here. Essentially, they're going to rule that these structures are actually abusive. They're illegitimate, they're illegal, whatever you want to call it. And now that we have that telltale, we saw their cards, we know that in all probability the Chinese regulators will rule that these structures are not legitimate. Now, what do you think will happen next? Option number one is basically the Chinese government saying, well, existing IPO companies we're not going to interfere with, it's just not fair. Sounds like something China would do? I don't think so. Option number two is basically saying, well, guys, we need you to delist ASAP and get back to China. And obviously, people with any experience in Chinese regulation and the way things work in China that understand the Chinese regulators' modus operandi pretty much will say that this sounds a lot like what China would do. And if that happens, that will cause a massive amount of damage to US investors and foreign investors in Chinese companies by definition. Once that gets out of hand, basically a lot of people will lose a lot of money. So my thought process on this, I don't want to be stuck holding the bag. That is why I specifically stay away even from great Chinese companies as a matter of principle, even if they're on a massive discount because of this structure. Because of this structure, the Chinese government can pull the rug underneath me at any time and leave me with literally nothing. I don't want to play that game. And again, this is just my opinion, which might be inaccurate, might be wrong, might be the ramblings of a madman. I always tell you, I'm not a financial advisor. I'm just a guy on the internet. You have to do your own research. Decide for yourself. I mean, for me, it's not good enough, but maybe for you it is. It's your decision. I'm just bringing you the information. Let's move on. Now, the second piece of information is actually coming out of Goldman Sachs. Goldman Sachs actually today decided to raise the target price on AMD from $106 to $111. And I find that kind of amusing because we spoke about AMD back in March. March 4th, I posted on our Patreon group basically saying, hey, this is an $80 stock right now, and my target price is $117 for me. And about a month ago, I doubled down on that as the stock dropped to $74. I released a whole free video for everybody, not on Patreon, on my regular channel, and I basically said a month ago, hey guys, at $74, this is an even better deal, and I actually released this video for everyone. So if you got in at 74, you made 20%. If you got in at 80, you made 14%. It's at $92 right now. And I think that Goldman Sachs are right, but I think they're actually underselling the stock. And here are my 2 cents about the whole Goldman Sachs target price about AMD and what I think is next. So the company is currently right now at $92. Goldman Sachs just raised their target price to $111. I have it at $117. We both think it is still undervalued and there's more room for this stock to run. And again, if you want to check out, I have a whole spreadsheet of every single stock that I talk about. So if you become a Patreon or a channel member, you can audit me every day, go into the file and see how bad my stocks are doing or good at this point. I mean, who knows? Now let's move on. So now let's talk quickly about Cathie Wood, ARK Invest, and ROKU. You're going to hear a lot of fun about ROKU being basically sold off by the ARK funds, which is not true. I don't hold any ROKU shares. You can't mistake me for a ROKU fan, but they just trimmed the position a little bit. They sold like 150,000 shares. It is still the second biggest holding in RK after Tesla. I mean, it's a huge deal. I think what happened here is that the stock ran up by like plus 20% in the past few weeks and they had to trim it down. I explained this before. ETFs, that's how they run. They can't get stock that go out of hand. Once the stock runs up, they have to adjust a little bit. It's a no news item. So if you see ARK Invest and ROKU, it's not a huge deal. Let's move on. Now, here's an article I want you to see, and it sounds boring. I mean, why would you click on this shit, right? Microsoft to redeem more than $2 billion of euro-denominated paper. That sounds like worse than watching grass grow. I mean, probably would rather go to a dentist than read this shit, right? Not exactly. This is a huge telltale about what's happening with inflation. Check this out. Microsoft is currently repaying debt in euro early with dollars. Why would they pay now in dollars for a future debt in euro? The only reason would be for this early repayment, which also usually comes with fines, but that's a whole different purpose. If you think that the dollar is going to be weaker upon the actual scheduled repayment, that's the only reason you do this move. So in this context, I think Microsoft are saying, hey, we think that inflation is coming, the dollar is going to get weaker, we're going to use the current price of the dollars to repay as much debt as we can in order to protect ourselves against inflation. Again, you have Microsoft, in my opinion, sending a strong signal about inflationary impact actually right around the corner. Now, speaking about things right around the corner, Check this out. There's two articles I want you to see. Number one is about the Olympics. Now that the Olympics in Japan have basically been set without any audience, and now that this article just came out, Americans will need masks indoors as US heads for a dangerous fall. You have two warning signs coming out from different places in the world, Japan and the US. In Japan, they're basically doing the Olympics without any audience, which is huge. It's a rollback. In the US, they're rolling back masks, probably indoors. So if you're thinking about macro stuff, you're actually seeing a return of COVID. At least strong signals that COVID may be returning. And if you can catch it early, if it actually pans out, you might make a lot of money on this crisis. I mean, I hate to say it, but people make money during crisis. It's just the way it is. You can either be on the sideline or you can participate. There's no other way about it. And again, I'm not a prophet. I don't know if it's going to happen or not, but it's a really interesting play. Now, if you enjoyed this video, make sure you share it with a geek friend that likes this nerdy stuff. As always, a huge shout out to the channel members and the patrons. I'll see you guys in the next video.